Hello, Jay. Hello, Terry. It's great to get back with you guys today. So, the Jay Powell speech today, do you guys have any thoughts on that? I saw the market first it's rallied and then it has the pullback.
Yeah. First is real quick, and then back to you and back to me and back to you, Jay, if that's okay.
Sounds perfect.
He thought he didn't get real specific about anything, but he did everything that I think he could have done in terms of what I wanted to hear. He basically, if there was a title to the speech, it was "Mission Accomplished." I think that is really the point, that he put everything in a historical context of the great inflation battle that we've had, and that it is now over. And now the focus is on making sure that he protects the jobs market. So it's the first time we've heard that kind of rhetoric, and he really used this speech to, I think, to cut an end cap on that. And that means we're not just looking at a September cut. We're looking at a series of cuts to move the Fed funds back down to 3.25%. What do you think, Jay?
Yeah, I'd agree. Just for starters, we talked yesterday about the Bank of Japan's Ueda sitting in front of Parliament, and I thought he did a pretty good job at clearing the path for Powell, where he said that they would continue on their rate hike path that they're on. This is the Bank of Japan, of course, but also with the caveat that they were very cognizant of their actions on what it was doing to the yen dollar trade as well as the carry trade, of course. So they talked about that they would be willing to move at a slower pace in order to avoid upsetting markets. And that was the first domino that we needed to fall for today. That allowed Powell to come in and really basically go on however he wanted to. He didn't implicitly say that they were going to cut rates in September, but obviously a lot of his commentary time has come for policy to adjust. The fact that they were moving firmly with that inflation had significantly dropped, that the jobs market was no longer a stopping point for them moving. It just set the tone for everything that they were ready to forward in September. Now, he talked about waiting for incoming data. There's three big reports in between now and the Fed meeting. They would be the PCE next Friday, the jobs number the following Friday, and then the CPI on the 11th. And that will be closely watched, probably provide a lot of gyrations, but in terms of volatility around those specific numbers for intraday trading. But at the end of the day, barring any big move on any one of those reports against the cut, it looks like they will go 25, possibly even 50 basis points in September. And I think that's what the real argument is at this juncture.
And I think so. We cleared the Fed funds futures are saying right now quarter point in September, and then another 75 basis points between November and December, and it's kind of toss up as to which one's going to be the 50. But it's another 100 basis points of reducing rates in 2024, and then it looks like the path from there, at least now, obviously lots of things can change in the Fed funds futures market over time, but the path right now is paved as basically once you get into 2025, it's a quarter point of meeting until about mid-year, and then you're down at what people are framing as neutral, and that's really if nothing goes wrong. If the story doesn't change on inflation in a negative way, or if we don't start to see a lot of pre-recession indicators pop up. That's kind of the path. But if you look at the price action today, you'd think you're disappointed. And I want to just encourage people to think we've had a massive rally over the last couple of weeks. The market has been pricing in this kind of shift. And eventually you get to the point where really the market's job is to shake out the late money that's trying to buy right off the news.
They obviously did a very good job at that, right, Terry? We got up to that 56.50 area, and then he proceeded to see the selling ensue. And that was one of the things that we were talking about in terms of who's left to chase here. AAII sentiment data showed bulls back above 50% on Thursday. And a lot of the data points recently have shown had a lot of cash on the sidelines, that a lot of people had been active. Terry and I have been talking a lot about the Bank of America Fund Manager Survey over the last week and a half, and that certainly pointed towards the idea of a full boat. And we saw that action, as Terry said. He shook out the weak-handed late longs here. Should make for an interesting close going in. And obviously, people are going to start turning their attention to Nvidia next week at this juncture, now that we got this headline risk out of the way. But it'll set forth I think personally it will lead, assuming Nvidia comes in strong, there's really no reason to believe that it won't, that it should allow for bulls to close out a pretty strong summer going into the Labor Day weekend and probably leading up to a slow grind higher going into that September 17 report. However, to Terry's point, it's going to really beg the question, if we get much higher than this, who's left to buy in there? And that question is going to be coming during a seasonally weak period in September and October. So,
and then the election hanging out there. Yeah, and then you got the election hanging in front.
Correct, right? And plenty of geopolitical risk around that as well, obviously.
Yeah.
One thing that I would factor into today that I think does come into play a little bit here in this profit taking that we're seeing, but way, released their tax plan. And one of the things that jumped out, of course, was the capital gains taxes. This, and I'm going to scare the market a little bit, probably lead to some involved in some of the profit taking here. It's an item that we'll discuss a lot more in the coming weeks, but election with her leading in the polls, that's going to be one thing that we're going to have to be cognizant of moving forward, that capital gains tax.
Yeah, I think uncertainty in general, thing is not known one way or the other. The market tends to have trouble advancing in front of it. And usually, even which way it goes, once the uncertainty drops away, is when you get the rally. The rest of the background is positive.
Right. Completely agree with that. And market uncertainty is always key. And I'm just kind of for the idea that we get a push into September, then, news around the rate cut, which historically shown to be the general response to a first rate cut. Some sideways price action going in. Obviously, Q3 earnings is going to factor in largely to that, but sideways price chop going into the election. And then, clarity on where we go there, setting up for a potential end of the year rally.
Yeah.
Capital gain tax on the big tech will definitely create some pressure on those like 7. And I noticed that for stocks like Google and Amazon and Microsoft seems being weak lately comparing with the semi sector.
Right.
Which is one of the reasons why you're seeing a rollover in the markets today, despite the NYSE advanced decline line being at about 8-1 in favor of advancers. I mean, caps have been doing great holding their gains here. The price action has come on the big cap tech, which has an outsized weighting on the index too. So the that you're seeing in the markets here probably isn't completely reflective of the broader S&P, given that advanced decline line for the NYSE is also 4-1 right now. That's why I think that we could continue to see a higher going into that September 17 meeting.
Yeah. Have rise like more than 3%, and it seems that when Powell said they're gonna be a pivot point, like a start cut rate, people think, oh, now interest rate like high yield bank accounts, the interest, they will put money in some speculative stocks like MicroStrategy, Carvana, MCI. Seems that's become the trading plan.
Yeah.
Jackson Hole speech. So for out of next week, the important event would be Nvidia release on Wednesday. So what do you think about the outlook for Nvidia as well as the whole market?
Why don't you start to field this one, Jay?
Sure. I think I'm expecting another solid blowout report from Nvidia. I mean, earnings season long, we've seen the expenses at Meta platform companies, and the reason why their expenses are so high is they're buying Nvidia chips. So play that we've seen talked about the strong demand. There's no reason to believe that Nvidia won't post another strong quarter. The question is, how will the stock react to that? Can it continue to go up? I think it can. In addition to Nvidia, there's a number of names that we're going to have to keep an eye out on. The day after Nvidia, we're going to get Dell and Technologies. A few other names that will get technology side during the week. Okta, Salesforce.com, just a few of the names that will be in. And we'll get a broader sense of that AI story is really expanding to other names. NVIDIA is clearly the leader, though. So I'm expecting a good report from them. Ed reports have been fantastic so far and been one of the reasons why we've had in control here, not just because of the Fed rate cuts, but because of the idea that the economy's not falling off a cliff at the moment. So you expect that story to continue into next week with Nvidia being the leader. I don't know what your thoughts are in terms of expectations for Nvidia. You're always pretty good at catching counter trends. So I guess my question for you directly would be, get you nervous about the price action in Nvidia if they did blow out?
Well, obviously, if they blow out and the stock jumps in knee jerk and then starts to grind lower in the after hours, maybe there's a couple other attempts to defend it, pop it up, but see next day the grinding, the slow, steady selling. It's not the spikes to the downside that you worry about in a post-earnings reaction. It's the good news followed by the grinding action lower. And you see, pockets are starting to cash in. I'm not saying that's what's going to happen. I doubt that we see that, but that's definitely where the worry would be.
Yeah, so perspective, like that on the daily chart, Nvidia has come to this resistance level at 127. So that would be a key point that the traders want to watch on and to see whether it will break this resistance point coming into the earnings next Wednesday.
Yeah, it breaks out, that it doesn't then immediately back. A lot of times when you have a sloped resistance line, you can top out in a situation where you break it out considerably, but then you give it back and you leave a big tail hanging up there through that trend line. So it really needs to be a sustained.
Yes. And another data point I find interesting is that I saw during the whole August, the Nvidia CEO Jensen Huang has been keep selling the stock at maybe 100, definitely not the highest point. So I think he cashed out a large amount of position. Maybe that's some of his plan, just like what Jeff Bezos does every year. But maybe that's also a sign for the traders that Nvidia's stock valuation is rich right now. So if they are not trading into the earnings, maybe like a smaller position and more cautious.
Possible.
Yeah, I'm not quite sure. A lot of these guys are selling for tax purposes and such. Into, again, the Harris tax plan about taxing unrealized gains potentially. I don't know if that could be factoring into his thinking. Different aspects that certain people are certainly watching. I wouldn't get overly concerned about seeing him selling here at the moment. I'm sure he's got a ridiculously significant position that him selling a couple of shares here and there probably make it look like outsized gains, but obviously worth paying attention to. But I wouldn't jump to conclusions just from seeing the headlines about the Form 4s there either.
I would also say that, realized gains is impossible. It's impossible to do. It could never be implemented. So it's a populist campaign ploy to float it. There's no way it could be passed because it's impossible to implement. There's too much swinging, too much changing.
Well, that's the argument against it, obviously, right? So
that's what I'm saying. It's impossible to implement. It's impossible to pass. So if she's floating that out there as the idea, it's not something that anybody who understands the situation would actually be concerned about being implemented, right?
Yeah, I'm looking at the possibility of a GOP Senate, right? Just in terms of getting the bill actually passed in itself.
I know. Okay.
Have perspective that they're just throwing it out there to rally votes. There's definitely that element to it.
Clearly.
Yeah. Thing I'd like to add is that some speakers' name we mentioned in the previous podcast, like IYR, ITB, and also has been doing great today after the events. So it's definitely a good trade if any of our viewers catch that.
Yeah, the beneficiaries here.
Yeah, and KRE?
I'm not sure if I had KRE in there, but that's the best.
I think we discussed it.
What's up?
I thought we mentioned it, but maybe not. I think we mentioned it in a prior podcast talking about the rate cut cycle.
Yeah, benefiting from improved AOCI losses for sure there, especially when it comes in the context that the economy is not falling off a cliff, which is a very important parameter behind the Powell speech. It wasn't so much in reaction to great concern about a big slowdown in growth, at least not for now anyway. It's something that could accelerate down the road, but For now, it had more about the idea that there is room to be able to loosen policy because of how restrictive it's been. And that was really a key element for this speech.
Absolutely.
And most evident in the KRE performance for the day. And the IWM for that matter, too. Because if they were cutting because of recession concerns, neither one of those would be performing nearly as well as they are at the moment.
Yeah. The CNBC contributor predict it can rally 40% this year because the rates is down and people will be chasing those speculative investments. And continue the rally seems like a trend.
Right.
Okay, I think we covered a lot today about a speech, J Powell speech at Jackson Hole, and what we are gonna keep looking for next week's Nvidia earnings. Thanks, Jay and Terry, hear from you guys, and we will look forward to see you next week.
Okay,
Take care, everybody. Have a great weekend.
All right.
Yes.
Yeah, you too.